Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So, Bitcoin holding this range just above the 30K region and bursting up to the next level of resistance at 30,270 on this daily time frame resistance level that I've had here for some time within this range. And this price action that of the pitch fan that we've been trapped in, we're staying above the 382. We could realistically start trading diagonal in a diagonal ascending channel above that, whoops, like so. We could do something like this while we ride that line. Let's go see how the liquidity is doing on high block capital. What is high block, you say? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using his stop loss, and we get to see where those crispy characters are, so let's do that now. Rare to see Bitcoin rise up over the weekends. For at least 6 months now, Bitcoin has had low liquidity weekends of sideways action, so getting this little push up over the weekend, quite interesting. What did that do when it gave that push up? It took out all the 50x shorts, while at the same time inducing some longs, 137 million in long liquidity buying into that resistance like a pro and getting liquidated. And then seeing this 50x pull down at 29,744 could be coming down to those. They are grabbing these 100 extras that bought the breakout I don't know why they wouldn't have paid themselves, but yeah, they got liquidated. So what is in store? It looks like they're building up a huge long liquidity pool to the tune of $11 billion down below here in imbalance on the 1 minute time frame. What is their target? We have to expand our vision to the external pools to see that. Shout out to anyone here. Turning on the max liquidity. On the 7-day time frame, you do have a small pocket of about $10 billion up at the 31K region. The entire region up from 28K to 30K has sparse liquidity within these candles, so they went and grabbed it, and not as much, no double digits within that range. So if it were to drop, it would be a Bart Simpson down to that 28K and below. The 7-day does insinuate the imbalance being to the downside. Let's go to the monthly. Monthly also has that double-digit liquidity sauce down below at 26.4 and below. Looks like their external target is on a different time frame, so let's go to the 3-month and the 6-month. 3-month has those double-digit pools up at the 32K region, and this is best expressed on the highest time frame, which we'll get to in a moment. On the 6-month, you got $146 billion at 32.1. So if they're going to attack this range, then they're possibly coming up to the 32K region. And if you look at this pool on the highest time frame, we got $218 billion at 32.4, $218 billion at 32.8, and $220 billion at 33.2. So $660 billion up in this region now has accumulated in short liquidity to justify possibly breaking the 32K range. So what positions were down here at 23.6 that they allowed to avoid getting chopped up? And September 11th, I have no idea, but they had $248 billion to take at the 23.6 region, which they did not come back to. Fascinating, really, when they came back and grabbed this 24.4, $241 billion, but they left this $240 billion alone. Which protected positions did they allow to exist? Maybe those are the BlackRock ones, I don't know. But as the store on value assets start to rise in the terms of gold and Bitcoin, gold and Bitcoin seeing this rise up, while the dollar goes sideways, retracing into some order blocks perhaps. So the dollar went sideways basically for the better part of 2 weeks now, while gold and Bitcoin see a little bit of a relief rally, and the risk on assets basically took a tumble as well. All the indices. So does Bitcoin continue forward in time? Let's go take a look into the charts. So what were we talking about yesterday? Well, yesterday's stream, we had you at the Asian range about here. Let's just do it right about there. So we were talking about retracing back into the actually, did we do it at 8 or was it 9? Either way. So we were talking about this possibly coming beneath the 236 and retracing down into the pools below. We said your zone you would need to maintain beneath would be this 236 region at 29,580. We did not hold true to that, but you did come down into this region. Where did the momentum shift after this point? Well, without having the momentum and the liquidity intact, you wouldn't have been able to see this. So link in the description for more momentummaster.info. You can scroll down and see all of these features and toggle at your leisure, the trend cloud, the baselines, stochastic array, and so on and so forth. So down here If you had this, you would have gotten a dynamic alert to your phone on the 5-minute time frame here that the baselines did cross up, and we were holding the baselines down here outside the channel. And then we came back above here and kissed the cloud, and we were gone. So here is where your idea for a short would have gotten negated, coming down into this cloud and holding the cloud, as we talk about often. So this cloud getting held each time. If we shift to a higher time frame here, the higher time frame shifted in, you have the super trend in your favor with the cloud and the baselines. You got that triple effect going of confluence. And here's where you kiss the cloud yet again on the 15-minute. And sure enough, you were gone from that point. Boom. This also most likely expressed itself on the hourly time frame. Hourly cloud was holding strong with the super trend from back on Thursday, still holding. Even before that, we were talking about the super trend effect over here on Wednesday, and that shift above the cloud. Super trend has basically been holding since Saturday, October 14th on the hourly time frame. So this is a level to watch for the trend to continue. Super trend has been very good for us. All right, so where do we go from here? Let's go ahead and take a look for today's analysis. Going into the weekly candle close, you are creating this kind of retest of this range to basically continue forward. Let's go ahead and start our descent through the time frames, shall we? Boom. Shout out to everyone that is watching. So, coming back to the daily time frame here, well, actually the 3-day, let's start there, because the 3-day closes, I believe, tomorrow. Oh, we just had a 3-day close. So the 3-day cross-up event has been very beneficial. We're looking at longs down here for the rocket ship that appeared down at the bottom here. And then they had a continuation rocket up here. So we had you at hello from this point in the charts, from the cross-up event to the rejection off the cloud, and then we had the rocket ship to here, and now we're getting this little upside path here. Where does this upside path dissipate? Let's go ahead and take a fib retracement here on this idea and see where it wants to lead us. So the next we made it up to the 30,180 region, and the next in line is up in this 32K. So do we see this continue all the way up into the 32K region on the 3-day? The 3-day baselines were holding. The last fat boy one was the last line of defense down here when we got that rocket ship, and sure enough, that sea wave played out. Let's go into the momentum here on Momentum Master B. You get the double top, the rising sun, everything's starting to push up here in a manner. You still have this ability to drift higher and suppress the 3-day time frame here. Let's go ahead and see how the daily time frame's looking. Daily time frame is crossed up again here as it started to maintain this adaptive moving average. The SR flip of the adaptive was quite beneficial for seeing more upside. What is the adaptive? Well, you can read about it here. Sensitive yet stable moving average which factors out noise and displays an accurate place where price will experience resistance or return to for support. In this case, we closed daily candles above the adaptive, which is the insinuation of strength, and we started to go higher from there after the kiss to the cloud. The kiss to the cloud here gave us that rocket ship signal out of here. And let's go into the momentum here. The money flow still beneath the RSI, which means there's some room for this money flow to surge up some more and go take out those zones at the 2-year time frame up in here, these 33.2, 32.8, 32.4. Is it possible that we're going to 32.4 in this region here? Entirely possible, because those $600 billion in short liquidity that they're aiming at could be the case here. The Williams still has a little bit of juice, even though it's overbought, to possibly push up into these upwards regions above the 80 level. If we go into the 22-hour time frame, 22-hour time frame still could drift the average of the Williams up further, similar to what it did here before it crossed down. So we could still drift in a ascending channel upwards to that region while they induce more shorts and scare out the longs to take profit. 12-hour time frame, you have this drift potential similar to this. What do I mean by that? Well, take a look at how this blue line drifted higher while this red line in the overbought status stayed relatively the same. So this could stay relatively the same while this blue line drifts up further, and it creates this ascending channel like behavior like this. So we could basically create that same type of inducement pattern for the shorts and just continue to drift higher, similar to this. So you could just start drifting up into that region while trying to create the insinuation of a top. So I would be wary about shorting this. We haven't cleared this range at all. There's definitely no insinuation of weakness just yet. And let's go into the 6-hour time frame. 6-hour time frame, money flow coming back into the level of the RSI here. That drift occurring on the Williams coming back above the overbought status still could drift a little bit higher. If we look at the cloud here on the 6-hour, mighty thick and pointing to 2 o'clock, still strong looking in terms of the thickness, not thinning at all. What do we mean by that? Well, you can read about that here. The expanding and thinning cloud of the volume present in the asset is the area where you'd start to look for that reversal. So until it starts to thin to the other side, there's really no reason to think about reversal just yet. Now, there is one first sign of reversal which is starting to express itself here on the 6-hour, which is this cross down event. Granted, it crossed down here only to surge up more, but this is only your first sign of reversal. So it's where the weakness begins first and foremost. So you're getting that flash on the 6-hour, has yet to close until this candle closes in 6 hours, basically 5 hours 41 minutes. If we look at the other than that, you still have room to go up slightly on the 6-hour time frame. If you go to the 4-hour baselines are above the price. 4-hour stochastic starting to come down here as we ascend, as it forgets its past candles. 4-hour cloud is thick and strong. Super trend holding since October 16th, this Monday. We are outside the channel, just bouncing off of it for some alert here. Hourly time frame. So we've been coming back to the cloud for some support. Right now you have the hourly cross down event. Came back into the candle here, recovered this entire vector surge up, and we're coming back to the channel average here and finding a reset of the hourly time frame. So on this hourly time frame, you could be getting a bit of a surge, possibly if it goes above this 236 level. You could be getting a little bit of a miniature bounce leading into the weekly candle close. Very interesting that we were to see this price action on a Saturday. Normally it just induces more
but actually getting a higher high over the weekend has been a rarity I haven't seen since 2022-ish or even 2021, since the exchanges lost their credibility as well as the altcoins. So if we go to the hourly here, you're starting to see this reset of the Williams. It could suppress the takeoff of the hourly, so watch out for that if you're trying to enter any fresh longs. If you're just monitoring your longs and moving your stops up to profit, then you have zones to look out for where you could move your stops, the super trend being one of them at 29.565, putting that stop into profit here. And looking at the 15 minute looking to take off with the hourly here. That's what this green dot is on the stochastic array. Stochastic array will tell you when all these time frames are fatigued, and you're getting a green dot here expressing two lower time frames that are reset, which are the 15 and the 1 hour here. So you can get this alert to your phone via the dynamic alert system like this. So this would let you know that you're getting overbought or oversold on 2 time frames and holding this super trend. So if it's worth it and you put that stop beneath the super trend, you could be seeing some upside. Also on Momentum Master, you could just use the trailing stop loss function here. In case anyone didn't know, it has a more frugal stop price, which would most likely, if I put this here, would be the higher time frame zone. So you would just set that on that time frame of the trade you're looking at, and then we go to the hourly. Even more frugal would be beneath that, but if you're looking for the risk reward ratio, you look at it that way. So you're getting some ambiguous signals as the baselines cross down, but the cloud and super trend are beneath you, so you don't have all three in congruence just yet. You have one working against you right here, so watch out for that. The cloud is still starting to gather some thickness with the super trend on your side, so if you're aiming for it, if 2 out of 3 is good for you, you got the Momentum Master Trinity on your side. 2 out of 3 of the Trinity on your side. You got the super trend and the cloud here. The cloud curvature could be better, but starting to give this kind of curved manner here. So if you cannot make it above this 236 of this impulse here, then basically you could be starting to set up for a fade of some kind into some of the liquidity. Let's go see what is in store for the possibilities below. You do have that $137 million pool of 50x at 29,744. 29,744 would be putting you down in here. So there is a little bit of happiness down in this region to the tune of 50x longs that they could easily bounce off the cloud on. And all these little characters we've been marking off along the way. $29,015. I think that was one down here. Yes, this guy. $29,015. And then you do have a pool over here, 29,137. 29,137. Basically in that candle, in one of these candles up here. Okay, so let me clean it up a little bit and let's go see in a little bit more detail here. So this super trend held quite nicely. We're breaking beneath the baselines here on the 15. So coming back up, possibly bearishly retesting and coming down into some of this liquidity on the 1 minute could make sense leading into the weekly candle close. The bullishness is real though, so be very careful if you're looking to short. If you're maintaining your longs, that's the basic idea of looking at where to put your stop loss into profit to lock in some gains if it does retrace. All right. If anybody has anything they'd like me to look at, you do have me a little bit longer than usual today, so you can get me to look at something for you. Total market caps curving in a manner here, tapered for a slight minute, got a little bit more volume stepping up to the plate. The super trend holding on the hourly since October 19th. Reaching a resistance point at the 706 level. The rocket ship on total 3 started to play out here. Interesting. The USTD dominance giving an ABC to the downside here after getting a nuke of fatigue of too many people stopped out as we got that rocket ship on Bitcoin inversely related. We could drift further down into these zones here, meaning more people invest into trades. We could delete this because this is an old retrace zone. These two, we'll delete that. So do you come back completely into this candle range here? Do you come back down into these? There's a fair value gap over there. Let's go see what that looks like on a lower time frame. Go ahead and turn this off really quick. Should have done it on the replay mode. There we go. So we'll just do replay. You don't have a replay mode for that? All right, well, whatever then. Yeah, essentially you have a fair value gap in this range for the dominance that we could come back into from July of this year. Which means more money could be coming into the market or into Bitcoin. In particular, if we look at the dominance here, dominance getting a rise off of that 706 level. Possibly coming up into this region for market dominance, which means that we would have more surge continuing. So if Bitcoin comes up into this region and chills out, and this goes down, would continue this trend to the upside. The Dixie possibly coming down into these order blocks down below.
So looks like there's more upside possibly in store. The fatigue looks like it may be a temporary fatigue as it builds more interest and orders. 236 level above 30k, so the 30k region a key zone to watch out for here. Can we make and surge some candles with conviction above this range? If so, you're slated to the next targets up here in the 30,700 region, and possibly even wicking up higher into the 32k to liquidate some of those pools on the external time frames here. So a long on the hourly and the 15-minute starting to play out with the super trend and the cloud on your side. 15-minute cloud could fatigue at these regions, so watch out for that. You're starting to flash the potential of a cross-up event. Super trend, baselines, cloud. If you get the baselines, the super trend, and the cloud on your side, you got the trifecta, the triage, the trinity of momentum master on your side here. So by the looks of it, we could be having some surge up to these regions, maintaining that range. It is Asia, so watch out for the Asia fade. They like to fade it into London, so it could fade off this region down into this pool. I would not be surprised if it did something like this, started to fade out and then went up. Basically need these pools on your side here. Why do I have this one here exactly? So we'll see how does this angle of insinuation of the, does this start to pick up some momentum and continue on its way to 2 o'clock, or does it start to taper at 3 o'clock and turn to 4 o'clock? That's what we are looking at with this thinning of the cloud on the hourly, starting to thicken up here, but could easily just burst and break down at this level. So make sure you have this cloud and this super trend on your side for the long idea to continue. Ideally, you want to get into a long when it's thinning and shifting back to the blue from the start of the trend, because then you capture the majority of this move. So you could be at the end of this move, potentially speaking, at the last vestiges of that. And that's about it. Let's see if you have anything to ask for. If you have anything you'd like me to look at while you have me, now's the time. Please shout it out in the chat. Give you a few more minutes. 11 billion imbalance to longs percolating below. We got that larger time frame 600 billion target up at the 32k region up here. That would be the external liquidity liquidation points. So the Asian session generally tends to fade it into London. There's a very rare time where, just like this, where Asia pumps it up, gets everyone hyped, and then fades it into London. So London could generally give you a better entry. Even though it is the weekend, you could see Asia fade into London and then New York sends it into the weekly candle close. So I'd be wary of some of these pools down below if you're looking to add to your long, or possibly think about a re-entry. I'd look at some bullish divergence off of these pools down below personally. So let's go see if there's anyone that shouted out anything. Doesn't look like it. Well, we appreciate your time. So once again, I would look for the 30,000 region to hold with some candles with conviction for the long idea to continue. If not right now, you could be getting a rejection off the 15-minute cloud up here and coming down into the pools, and possibly spawning some bullish divergence down in these regions below for a potential hit to the upside. But this would also adjust as it retraces down as well, so your target would change from this current moment. This is the target in the 236 as of this moment in time. If this is a true reversal, it would need to get above that right now. Hopefully that makes sense. So as of this pivot right here, this is the pivot level it needs to be at for this to be true. If it rejects at 30,063, then we could be coming down into these pools, essentially speaking. Alright, ladies and gents, that's my story and I'm sticking to it. So I thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we will catch you